welcome to Sectors Up Close. I'm Elena Casas. Today we're looking at Canadian stocks and my guest is Paul Bowes, FTSE Russell country head for Canada. As inflation hit its highest rate since 1983, policymakers at the Bank of Canada raced ahead of their global counterparts in raising rates by a full percentage point in July. Those rising rates have been good for Canada's banking sector, and financials make up a whopping 41% of the FTSE Canada index. That means it's outstripping global counterparts. It's down just 9.3% this year compared to over 15% for the S&P 500. Aside from financials, the other major sector here is energy, making up 19% of this index. That hit the headlines this month when German Chancellor Olaf Scholz travelled to Canada in an attempt to boost energy ties. Soaring global energy prices have given the world's fifth biggest natural gas producer an incentive to invest further in LNG. But without facilities on its east coast, it lacks the ability to export directly to Europe. So, what's the outlook for Canadian stocks? Let's ask FTSE Russell's Paul Bowes. Paul, hi, thanks for joining us. Let's start then with financial stocks. From the Bank of Canada, of course, we've seen one of the steepest rate rises in the Western world this year. What impact has that had on the country's banks?
Well, thank you, Elena. And yes, if you look at the FTSE Canada index versus FTSE World or FTSE US, Canada has performed better so far in 2022 with these increased interest rates. The conventional wisdom is that banks don't do so well when interest rates are low, and as interest rates rise and the slope steepens, it makes it easier for banks to make money off of yield spreads. In the US, which is dominated by technology stocks and others, they're hurt by rising rates since their expected earnings are in the future. So our financial stocks here in Canada are generally seen as value stocks, and hence one of the difference between in 2022, the difference in performance between growth, technology, which has been down, and value, such as financials here in Canada. So yes, in the short term, this has done the Canadian market better. However, I would suggest that in the longer term, if there's an impact on the economy, and in fact, you mentioned the housing market, Elena, the rise in interest rates have definitely had an impact on housing. That's a massive asset class here in Canada. And the Toronto and Vancouver housing markets have markedly cooled. I would say, though, Elena, that that's possibly not a bad thing since they were close to bubble territory.
What are you expecting then next from the Bank of Canada? Will they continue with these sorts of aggressive rises? And what impact would you expect that to have on the wider economy?
My view, and these are my views, Elena, I believe that the Bank of Canada, like most central banks, are so determined to maintain their reputations for holding inflation to the range that they've been targeted, that I do expect interest rate rises to continue. That'll obviously be affected by the rate of inflation, and eventually this could have a more negative impact on the overall economy, which would certainly impact the banks as well.
What about the energy sector, Paul? Have rising prices around the world created opportunities for Canadian energy companies?
Well, the Canadian economy is very dependent as well on banks, also on energy. You mentioned that the German Chancellor's visit had a surprising response from the Canadian Prime Minister, who I think he made the comment that he wasn't convinced on the business case. I believe that this will have a positive impact in the medium to long term for Canadian energy companies. However, I believe what the Prime Minister was hinting was that he does not expect major government support for building, for example, an LNG plant on the East Coast. Also, the Prime Minister struggles is in a minority government in being supported by a progressive party, and the Canadian performance against the Paris Convention commitments have not been very positive. So I think the Canadian government is trying to be cautious. Obviously, it sees an opportunity with European opportunities moving away from Russian oil and gas, but at the same time, the Prime Minister is trying to maintain his green credentials.
As you've mentioned, Paul, Canadian stocks have performed well this year compared to global benchmarks. What are the best ways for international investors to expose themselves to this?
Well, having worked at the Toronto Stock Exchange, Elena, they'll be very pleased you asked this question. There are many ways. In the US, for example, you can purchase Canadian stocks through American depository receipts. Also, I should point out that the largest Canadian companies are almost all interlisted on a US stock exchange. For example, there's over 100 Canadian companies listed on NYSE and about 75 listed on NASDAQ. The other way, Elena, is through global themed ETFs, which can have a variety of stocks internationally as well as European as well as American. And many of these ETFs are linked to either a FTSE or a FTSE Canada index as well. So yes, there are many ways for your listeners to get exposure to Canadian stocks from abroad.
Well, thanks so much for that analysis, Paul Bowes, FTSE Russell's country head for Canada. Well, that's your roundup of Canadian stocks. I'm Elena Casas, and this is Reuters.